Hello, everyone. I'm sure you have uh, seen the previous videos about the informations wise toys. Now we're going to use the Excel file to interpret the informations. Selling price for per unit is $90 and the demand is 72. Raw materials is 25 per unit. And we know the labor cost is 90K per month. And we know the utilities 20K per month. The information given is 1% of sales revenue. For the machine cost and installation will be 20 mil. The useful life is like 10 years. Residual value is 1 million. What is the meaning of residual value? Residual values means after the 10 years, then what is the um, value on the markets? It's like the car depreciates after 10 years, then still, if the car still can run, then they have still some of the value in the markets. So for these machines, um, in the markets after 10 years, still have 1 million values. Opportunity cost. Opportunity cost for rent is 180K. And can I realize potential loss for cannabis is 800K per year. Receivable is 40 days and account payable is 35 days. Structure of the debt is 40% of debt, 60% of equity, income tax is 18%. Cost of debt. Their given cost of debt is 10%. And the given cost of equity is 18%. So we get our weighted average cost of capitals, which is for this Wise Toys company is 14% per year. Weighted average cost of capitals means the combinations is come from the cost of debt, the cost of equity, and the capital structure, and the income tax derived for the weighted average cost of capitals 14%. Thanks.